Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Luminar Technologies.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
We have to start with the big headline, the one that probably scared a lot of people. Luminar has filed for Chapter 11?
Yeah, that's the kind of news that makes shareholders panic immediately.
Right. But Chapter 11 isn't, total liquidation. It's a restructure.
Exactly.
So the first question has to be, why? How does a company with some of the best AV tech in the world get here?
It's a great question, and it wasn't a sudden thing. This was more of a slow-motion crisis.
Okay.
You had two big problems converging. First, their revenue. It was declining because the massive adoption of LAZR, which everyone was expecting.
The big boom.
Yeah, that boom.
Yeah.
It just happened a lot slower than the industry predicted.
So the market just wasn't ready for them. But what about their spending while all this was happening?
That's the other side of the coin. Their operating costs were enormous. I mean, you're pioneering cutting-edge tech.
Right.
And more importantly, they were just buried under a mountain of legacy debt. So their profit margins were deeply negative. The math just wasn't working.
So they saw this coming.
Oh, yeah. They warned of a cash shortage by early 2026 if they didn't do something drastic. The filing was really a preemptive move to reset the balance sheet before a total collapse.
Now, usually these things are messy. You get creditors fighting over everything.
Sure.
But this one seems different, cleaner.
It is, and that's the silver lining here. The reason this isn't a zero. This isn't some contested, ugly battle.
Okay.
You've got massive support from the debt holders. We're talking 91.3% of the first lien note holders and almost 86% of the second lien. They're on board.
And for anyone listening, why is that so important? That consensus.
It means the restructuring is almost certain to go through smoothly, without years of legal fights. It signals that the creditors, the people they owe money to, believe there's real value in the company's core assets. They'd rather get paid back from a successful company than fight for scraps in a fire sale.
And it sounds like the company was already trying to trim the fat operationally.
Exactly. They'd already started cutting costs, even a 25% workforce reduction. So the plan is pretty clear. Use Chapter 11 to shed the debt, and what's left is a much leaner, more focused company.
Let's shift to that then, the part of the business they're trying to save. What is the core asset here, the competitive moat?
The moat is all about their intellectual property. Specifically, their expertise in photonic integrated circuit technology, PIC tech. That is their secret sauce.
Okay, for those of us who aren't semiconductor experts, break that down.
Yeah.
What is PIC technology?
Think of it this way. A lot of competitor LiDAR sensors are kind of bulky. They have lots of moving parts. They're expensive.
Right.
PIC lets them put the entire system, the laser, the scanner, everything, onto one tiny little chip.
So it's smaller, cheaper, more reliable.
That's it. It solves the biggest problems for mass adoption. You can integrate it seamlessly into a car, and it's way cheaper to make millions of them. They have the best component, just in the wrong financial wrapper.
So bankruptcy is like surgery. You cut out the debt tumor to save the healthy organ, which is the IP.
Precisely. And that brings us to the immediate catalyst that's funding this surgery, the sale of Luminar Semiconductor, or LSI.
Which is their chip factory, basically.
Yep, the fabrication unit. And our sources show it's being sold to quantum computing for about $110 million. This sale is critical.
Why is that seen as the key to unlocking value here?
Well, it gives them immediate cash to pay down debt and run the restructuring process. And what's really interesting is that LSI is still operating normally through all of this.
So they're selling the factory but keeping the blueprints.
Exactly. They keep the patents, the core tech. That $110 million, which should close by the end of January 2026, is the money that greases the wheels for this whole thing.
And it's important to remember the demand for LiDAR itself hasn't vanished. We're still seeing big fleet expansions from companies like Pony AI in China.
Right. The tech isn't obsolete, not by a long shot. The market just needed more time than the old debt-heavy company had.
Which brings us to the founder, Austin Russell. He's not walking away from this.
Far from it. He's still holding an 8.4% activist stake. That is a massive signal of insider confidence. He clearly believes the core assets are worth way more than the market thinks right now.
And he's not just holding on, he has a plan, right? This Luminar 2.0 idea.
Yes, he's proposed a buyout through his other company, Russell AI Labs.
So what does that vision, Luminar 2.0, actually mean for the future?
It's the pivot. The whole concept is to use this Chapter 11 process to emerge as a brand new, debt-free company, one that's purely focused on growth, leveraging that incredible IP without the old financial baggage.
A total reinvention.
Absolutely. And there's a lot of speculation that this buyout could involve merging with a larger, more established auto tech firm.
To get the scale and stability they couldn't achieve on their own.
That's the idea. A recognition that this is a tough, expensive business to scale up.
Okay, so with all that potential upside, how is the stock actually trading? Because this is the definition of a distressed asset.
It's trading exactly like one. I mean, extreme volatility. It dropped something like 61% right after the bankruptcy news. The market has priced in all of the fear.
And the technicals must look awful.
Oh, they're strongly bearish. The stock is way, way below its long-term moving averages. The 200-day EMA is up around $5.50. This is a stock the market does not like right now.
But with distressed assets, sometimes that extreme fear is where the opportunity is. Is there a potential floor analysts are looking at?
They are. They're pointing to a support level somewhere between, say, 18 and 22 cents.
The capitulation bottom.
That's the term, yeah. It's the point where basically everyone who's going to sell in a panic has already sold. For a speculative investor, that could be an entry point. Some technicals are even showing a hidden bullish divergence because it's so deeply oversold.
Of course, we have to talk about the very real risks keeping it down there.
Yeah.
What's the bear case?
The most immediate risk is delisting. There's a potential NASDAQ halt scheduled for December 24th, 2025. If it moves to the OTC market, you lose a lot of liquidity and institutional interest.
And then there's the baggage from the past, right? The legal issues.
Exactly. There are ongoing fraud investigations against former management about misrepresenting the PIC tech's capabilities, some other ethics issues. That creates a huge cloud of negative sentiment.
But you could argue that at, sub 50 cents, a lot of that is already priced in.
Many analysts would agree. The court-supervised restructuring is actually designed to manage and isolate those legacy issues, giving Luminar 2.0 a clean slate.
And the final risk is just the mood.
Yeah, market sentiment is still very bearish. There's no big institutional money piling in just yet.
So let's pull this all together. What's the consolidated thesis here?
What it boils down to is a highly speculative bet on a successful creditor-supported restructuring. The whole process is designed to sell off that LSI unit, get cash, kill the debt, and unlock the value of the core IP from these extremely depressed price levels.
And if it works, the potential upside could be significant.
It could be. Again, not a prediction, but analysts are still floating targets in the $1 to $2 range if this restructuring is successful. It's a pure risk-reward play.
So for you listening, what are the key dates to circle on the calendar?
The timeline is pretty short, 1 to 3 months. First is that technical date, December 24th, 2025. That's the potential delisting halt.
Right.
But the big one, the main event, is the end of January 2026. That's the target for the court to approve that $110 million LSI sale. If that goes through, the whole strategy is validated.
So here's the final thought for you to consider. This whole thing hinges on the legal process. The technology itself, Luminar's LAZR, isn't really in question. It's world-class.
The real question is whether the founder can actually pull off this Luminar 2.0 pivot. Can he turn this debt-heavy company into a lean, focused growth machine? The tech is there. The business structure is what's on the line.
It's a fascinating story where financial engineering meets revolutionary tech. The next few months will decide everything.
If you're tracking this situation or any other complex market stories, make sure you subscribe and tune in next time for more analysis.